Hey there, I'm known on Twitter as Johnny Sachs, and my favorite cryptocurrency is Hex. And if you've been following me, you know that I've been teasing that Hex has a secret weapon. Today's the day that I finally show you why. Come check it out. What if I told you that we can onboard a new user into Hex virtually automatically? And now what if I told you that buying Hex without buying into its secret weapon as well is obsolete? What if I also told you that staking short term in Hex is now obsolete? And what if I told you you can put your hex into the secret weapon with virtually no risk? Now what if I told you this? What if I told you that we can increase the price of hex without actually increasing the liquid net worth of its holders? Okay, so we got to cut to the chase because I can't actually explain to you how the secret weapon works or what it does without just revealing it first. So let's go ahead and reveal the secret weapon, and then I'll get into explaining why it's the secret weapon and how it works. So here we go. So if you're a hex staker, then you're probably already aware of this. Except, even though you're aware of it already, I can tell that you don't actually realize what this thing is. I can tell that because it's already existed since January of this year, 2023. So this thing is 11 months old, but nobody has realized the power behind this thing. The reason I can tell that you haven't realized the power behind it is because it isn't getting much support from the community. So we're going to change that today because it's time you all realize what the power behind Calm is. Okay, so there it is. The secret weapon is Calm. However, there's one very big thing to point out about this, and it's that Calm is the coin that supports the secret weapon. But the secret weapon itself is not the coin itself. The secret weapon is the plan behind the coin and how we're going to bring out the power behind this coin. So that's what I'm going to get into. That's what I'm going to talk about here. I'm going to show you all what makes this thing powerful, what makes this Hex's secret weapon. So let's get into it. Okay, so if it isn't apparent by now, I have to mention that I am not the founder of Calm. So I did not develop the token Calm. I am, however, the one who strategized the plan, and that plan is what I'm calling the secret weapon. But Calm itself is actually a token that is created by a Hex community member who goes by the name of Kodiak. He's a community member that's been in Hex since when it first launched. But that's his story to tell. I just happen to be the person who discovered the power behind his creation, and I just happen to be the person taking it upon myself to deliver the message to the community about how we can use this token to transform Hex into what I believe it should have been when it first launched. Now, as you look through this website at communist.app, you'll be able to go through it and you'll see that it's a token that gives out Calm as a reward for staking Hex. So as we look down this page, you'll see it explaining what Calm is. You'll see that it talks about how it gives out rewards to long-term stakers. It explains the details of how those rewards are handed out. You get a reward for starting a stake, and then you also get a reward for ending a stake. Okay, and also you're going to get rewarded for running good accounting on late stakes. And it goes into details of how the payouts and penalties work, and you'll also be able to dive into the details of that on your own. We don't need to get into the details of how these payouts work, but what you won't see on this page is why would anybody want to support this by buying into it. So basically, as a user, you're most likely to come here and you're just looking for free money as a reward for staking Hex. But what you won't realize by reading through this page is that this has the power to transform Hex and evolve it into something extremely powerful. So if you've seen me teasing about this on Twitter already, then you already know what superpower I'm talking about. That superpower is the power to virtually automatically onboard new users into Hex. You did hear that right. We have the power to onboard new users into Hex virtually automatically. So, like I explained earlier, Calm has actually been around since January of this year. That means that it was actually around since before the launch of Pulse Chain. Okay, but this here is the chart of Calm on the Pulse Chain network. So this chart actually starts in June Okay. And there is some data that goes back to before June, back when it was just on the Ethereum network. There is a chart for that. But just to not get into the weeds of that, basically the chart was higher before this point and then it went down. But let's see what it did since June here. So as we scroll through this, this is not a log chart, by the way. This is a linear chart. Okay, so we'll see the history here up to where we are today, and this thing has been rising. So what you'll notice about this chart is that it doesn't do a very good job of going down. Let's go ahead and put this on the log chart now and get a better resolution on what this chart has actually done through its lifetime on Pulse Chain. So this is COM versus the dollar right now. And you can see that on the log chart it's rising, which actually means it's a parabola on the linear chart. And if you can notice, this thing doesn't do a very good job of making new lows. In fact, it doesn't do a very good job of breaking local lows at all. Seems to just stay on an uptrend. The reason for that is because this is a very scarce coin. This coin is only can only be minted by users who have hex stakes, and it gets minted the most by the users with the longest hex stakes. And since it's been around since January, you can imagine that most people minted all of what they had back in January when it came out. And since then, it had a chance to dump as it would as a free claimed coin. Users come in and they don't see the value, so they just take their coins and they say, I'll take the free money, thank you very much. And then they dump it and they leave. But what happens is after they do that, they don't realize that what they're dumping may just be a diamond. So let's take a look into why that is. So I'm back on the COM webpage here, and I'm under a section of the webpage that has the historical data on the mints, the amount of tokens that have been minted by hex stakers on this chart. So you have the start day here, and you have the end day, and you can see that the beginning of the history for COM was on day 1134 of hex. Okay, right now we're currently on day 1424 on October 26th of 2023. So you can very quickly notice on this chart that most of the minting happened in the early life of this coin, and then it drastically diminished after that point. So I'm just going to get some better resolution on this chart by zooming in. So I'm going to go ahead and start this on day 11, let's see, 1140, let's say 1150. Just to zoom in on the chart a little more. And here we are. And so you can see that the mints were coming out a lot early on in the chart, and they've been diminishing ever since. So as we continue to zoom in more, I'm going to zoom in just a little bit more to, say, day 1270. There we are. And now we are finally starting to see that the mints have kind of slowed down. So, right now you can kind of see the highest amount of mints that we'll see on a day is 800 trillion coins. So there's a very high supply of this coin. It goes into the quadrillions of coins. The supply itself is not what really matters. It's more of the supply schedule that matters. We know that. In crypto, supplies can be very high, and that does not have impact itself on the value of the tokens, or at least the market cap of the tokens. What actually has more impact is the supply schedule and how much is being minted over time, and how much inflation is coming out over time. So, right now the trend that we're in is we're seeing kind of a peak mintability of about 800 trillion tokens. Remember, if we go back to the early days when it first launched back in January, So we're at around 800 trillion as a max mintable tokens today. But back in the early days, we saw up to 28,000 trillion. So very big difference there, and you can see that most of them were already minted. And of course, most of that also got dumped. So the chart has taken a lot of its damage already, and that's why we're able to see an uptrend on the chart now. But I just want to bring that point up because from here on out, this token only becomes harder and harder to mint over time. So that's why we see the scarcity in the token. But that's a mild point. That's just one point to touch on about why this thing has some legs. And we're going to get into a lot more about where the power behind this coin comes from. So let's get more into it. Okay, so now let's drill down on what really brings out the power behind COM, its synergy with Hex, how I believe that there's a fusion between Hex and COM that makes Hex into what it truly should be. Okay, so let's talk about it. Let's get into it. I have a spreadsheet here. Guys, this is all math. Okay, that's how this works. Okay, so if you're not somebody who likes math very much, I really apologize. I'm going to try to go through this as simply as possible and make this as simple as it can possibly be. However, no worries, because when it really comes down to it, the plan is going to be laid out for everybody and it will be simple. So please, no matter what your math ability is or your ability to follow what would be going on with any formulas and equations here, no worries, it's going to be laid out for you. I'm going to go through this and everybody is going to feel good in the end. I promise. Let's go through it. Okay, here's how this all works. Alright, so I have the Excel spreadsheet here. This is going to go through how this all works. Alright, right here in columns A and B, I have a small table here that goes through with some data points. You have the price of COM, you have the current price of HEX, okay, you have the amount of HEX in dollars that we're planning to stake, then you have the HEX current share price, and then we have the amount of HEX that is going to be staked. Alright, these are going to determine the values that we're going to get. So when we stake our HEX, we're going to get a reward in the form of COM, and that reward is going to come in the form of a start bonus, which is what it's called in COM when you mint it. You get a start bonus. That start bonus is 25% of the total amount of reward that you're able to receive. The other 75% of the reward comes after your stake has matured already. Okay, so you get 25% of the reward for starting a stake. And then, depending on how long your stake was, when your stake ends, you'll be entitled to the other 75% of the reward at the time of maturity. And so I have some sample data in here. I have the current price of COM, I have the current price of HEX, and I am pretending to stake about 1 million HEX. Okay, so the values that we're going to be looking at just for now in columns V and W, where you have the max payout dollar value and the start supply dollar value. That's based on staking 1 million HEX. Okay, and then you have in columns D and E, it represents the time that you're staking that HEX for. So if you stake your HEX for half of a year, okay, or 180 days, okay, you would get, for 1 million HEX, you would get about $27 worth of COM in total after that 180 days has matured. But for just starting the stake, you'll get about $6. Okay. Now, I'm calling it a coupon rate. So when you stake your HEX, you're getting a reward back for staking your HEX. And so I think of it like a cashback deal where when you purchase something, you're going to get a little bit of cash back as a reward. So in this case, you have, I'm calling it a coupon rate. So that cashback reward is basically a coupon rate. Okay, and so you have the max coupon, which would be based on the full reward based on you serving your entire stakes term. And then you have, shown in column Y, the start coupon, which is what we're going to be focusing on here. And that's the reward for simply starting the stake, which ends up being 25% of the total reward. So just for starting a stake, you can immediately go claim COM for 25% of the full reward. And then remember, you can go back and claim the rest of the reward for ending the stake when that stake ends, whether it's a year from now or 15 years from now. All right, guys, so here's the trick to this. Again, we have the highlighted column here, that start coupon rate. That column is the key to this whole thing. Okay, this is the key to why this is a secret weapon. All right, because right now, based on the current price of COM and the current price of HEX, it generates a ratio in the COM versus HEX price. That's shown here in column C, this highlighted data point here. Okay, and then based on that, you get a coupon rate or an amount back that you're getting for staking your HEX. So let's focus on the 15-year, the 5555 stake. If you were to stake 1,000,000 HEX for 15.2 years, the 5555 stake, okay, you're going to get 4.7% of your value back as a reward in COM. Okay, that's based on the current price of COM. Okay, so this is where you would have to start thinking, because you have to think about this. What if that start coupon percent was actually at 100%? So in order to get to 100%, the COM price would have to be high enough for that to be at 100%. I'm going to plug in that price and take a look at what that would mean when we get there. So let's add a multiple to the price. And we're going to see this turn into, for a 15-year stake, a 100% coupon rate. What does that mean? That means that if the price of COM goes that high, then I can get a free 15-year HEX stake. Yes, a free 15-year HEX stake. I can stake my HEX, and then when I go claim COM, I get all that value back. Okay? So that's what that would represent when you hit a 100% coupon rate for the start bonus. Okay. Now, the first question you should probably be asking yourself is, why would anybody want to be giving away 15-year HEX stakes for free? Why would we want to do that? Well, before I get into that, let's go over to the COM HEX chart and let me show you a little something. Okay, so this is the COM chart versus HEX. All right, so you can see this is looking like a very messy chart, but I assure you this is not a messy chart. This is deliberate. I have a bunch of horizontal lines here in green representing all the coupon rates from in multiples of 5, from 5% all the way to 100%. Okay. Right now, the price is hovering in the range of the 5% coupon rate. Okay. Now, I personally have been stress testing this chart and seeing at what point do the sellers really get activated. So you see that this chart was very easy to push up. It does not take a lot of value to push this chart up. So it peaked out at about 30% coupon rate. And then, of course, came back down because it is a low liquidity coin. Not much user support here. So there's not a lot of buying or selling going on. But it is at a 5% coupon rate currently. Again, it got knocked down from a peak of 30% because it is easy to send down due to low liquidity. Okay, but it's also easy to send up as well. So as we look at this, I'm going to go through that this is kind of the trajectory that we want to be on. We want to go and reach towards higher coupon rates. Now the coupon rates, they are not static. They actually do change over time. However, here's a key point. They change according to the T-share rate. And as the T-share rate goes up, the coupon rates actually get cheaper, which means that these values that you're seeing for the coupon rates on the horizontal lines, these values will actually get cheaper over time as the T-share rate rises. Now, there's a major point when it comes to that that I'll get into later. For right now, let's go more into this coupon rate and what it really means. All right, so we're back to our spreadsheet, and we're imagining that we're at a COM price that gives us a coupon rate for the start coupon at 100%, meaning we get a free 15-year hex stake. Okay. Now, here's what I want you to imagine. I want you to imagine that this coin, when it launched, anyone who claimed it, I want you to imagine that nobody ever sold it. So everybody had their free coins, but instead of selling their free airdrop, what if they held it instead and never sold it? What would happen is the price could already be at the 100% coupon rate easily because nobody's selling it. What would that mean? That would mean that a new user can come along, stake Hex for 15 years, and then come back and claim their COM. And then if somebody wants to put some money up, that new user can claim some free money while getting a free 15-year Hex stake. Now you've just onboarded a new user into Hex pretty much automatically because they saw that there was free money sitting there to claim. Okay, so this is the chart of COM versus Hex. This is a linear chart, so let's go ahead and push the log button so that we can get some better resolution as to what's going on. Now remember, COM actually launched back in January, but the earliest plot point on this chart is May 13th. This is a daily chart. And if you want to see the chart from before May 13th, you'll need to look at the COM versus Hex chart from the Ethereum version of COM. This is the pulse chain version of COM. But if you do look back at the Ethereum version, you'll see that it started off somewhere around this range here, and then it just kind of fell and didn't get much support. So it actually had no trading volume for quite some time. And now when Pulse Chain launched, it took some time to start garnering some value, trended sideways up until about July. And then come about August, it just started uptrending parabolically versus Hex. And it's still on its run, not really breaking the lows, which is interesting to me because it shows that the sellers don't have much supply. And demand easily outpaces the sells here. So that's a notable thing here because it means that we're off on a good position already. It's also nice that this has been around long enough that it had a chance to go ahead and sell off first. And now we're in a position where we can just trend up from the bottom. And again, keep note, this is the chart versus Hex, not versus the dollar. So it's interesting to see that you can actually gain value versus Hex with this coin. And we're going to come back to that point because there's actually something I'd like to bring up on that note of this thing growing value versus Hex. We'll touch on that later. All right, so we're going to start getting a little more interesting, and I'm going to now take off the log chart here, and I'm going to unhide this information here on the chart. Now, I'm going to zoom out, and we're going to look at some things here. So on this chart, I have marked, okay, let me just get it all into the visual for you. Just a minute. There we go. So, as we look at this chart, and just real quick, let's recall that when I go to the spreadsheet, just a second here. So you remember we brought up the coupon rate, okay? And right now, currently, based on the price of COM and the price of Hex, we're going to focus on the 5555 stakes, okay? Because that's where that's the main focal point with this whole thing, okay? The coupon rate for a 5555 stake right now, based on the price of COM and price of Hex, is at 5%. I'm just going to zoom in so you can see that better, okay? So 5% right now. So now going back to the chart, you'll see it on the chart. I've marked with the horizontal green lines the 5% coupon rate, and each level in multiples of 5%, all the way up to the 100% coupon rate. So you can see where the price is right now, meeting up with the 5% coupon rate level. Okay. Then you can see on the chart where it peaked up to on the wick. It went all the way to the 30% coupon rate, and then shot back down to the 5% coupon rate. That ends up being a large price drop. But it's such low liquidity that you have to expect that right now until we grow some more liquidity in the system. Now, as you're looking at this, you ask yourself, okay, what does it mean to get to the 100% coupon rate? Why would that be a target? So the 100% coupon rate means that if you're at that price, 5555 stakers get to make a 5555 stake, and then they get to go back and claim COM and get their value back that they just staked. So they get to make a free 15-year stake. Okay? And so then you ask yourself, why do we want to give away free 15-year stakes? And the reason we would want to do that is because this is where it turns into an automatic marketing system. Because if you're at 100% coupon rate and you go anywhere above that, say even $100 above that, that means a new user can come along and somebody can let them know, somebody from the community says, hey, if you use the Hex system and make a stake for 15 years, you get to come back and claim $100 for free in COM. And it's going to automatically onboard that user because nobody's going to deny that free money. Okay, so that's where the power of this comes into play. That's where this becomes an automatic marketing system. Now, it remains in the state of being an automatic market system even if you're below the 100% coupon rate, because let's say that the chart does this where it goes up to the 100% coupon rate and then starts trending down after that. Okay, and then maybe it kind of, and what I would imagine this doing is that it kind of comes up to the 100% level, maybe it exceeds it for a little while, and then comes down and starts to level off and kind of find its range. Okay, now if the chart does that, let's say it found its range at the 85% coupon rate level. Now at that point, what it would be doing is you would have a system where consensus global behaviors of the market participants have agreed that an 85% coupon rate is the perfect discount for them to be enticed into making a 15-year hex stake, because they're still putting up the money to get the 15-year hex stake. They're not getting the stake for free in that case, but they're getting 85% of their value back. So it essentially becomes an 85% discount on the current price of Hex. And so this is where we get an opportunity to make Hex's market dynamic, its price action, more efficient, and even have more liquidity, because it's easier for the market participants to find what is the correct price discovery for any type of stake that they want to do, whether it's a short-term, long-term, or if they just want to hold liquid. It just helps the market to find the correct pricing faster, and it can use COM as a tool to find that pricing more efficiently. Okay, so what if we see that, and just to make the math simple, let's just use a 50% coupon rate. What if the market stays at a consistent 50% coupon rate? What would that mean for Hex? It would mean that anybody who is making decisions on how to stake, their decisions are going to be influenced based on this coupon rate. Okay? And the major reason that their decision is going to be influenced based on this, as to whether or not they would choose to stake 1 year instead of staking 15 years, for example, Let's look at that. Let's look at how the market participant is going to have to weigh this option out in their minds. So let's take a look. I'm going to go back to the spreadsheet here. And right now, it was at a 5% coupon rate. I'm going to adjust this so that it's at a 50% coupon rate real quick. It's close enough to the 50. Just did some quick calculation there. But what happens is the staker has to weigh out in their mind, okay, if we look here at how many years they're staking versus the coupon that they're going to get, it becomes clear very quickly that the 15-year staker gets much more than, say, a 5-year staker, for example. In this case, if the coupon rate was close to 50%, a 15-year staker gets a 50% discount, but a 5-year staker only gets a 4% discount. And so then they have to reconsider. If they were only going to stake for 5 years, they have to say, wait a second, I wanted to stake for 5 years, but if I stake for 15 years, I'm going to get a 50% discount instead of a 4% discount. And so you see how that changes the dynamic. Because there's such a disproportionate reward for staking longer instead of shorter, it changes the dynamic of how the market participants are going to decide to stake, and it's going to result in most people deciding to stake much longer. So we can see on this table, you know, per year, for every additional year that a staker stakes for, these values are showing how much more reward they get in COM based on that additional year. And then, for just a quick reference here, I'm showing that a 15-year staker gets 51 times as much value in COM as what a 1-year staker would get. And so this dynamic of disproportionately weighting the rewards to the long 15-year stakers is what is going to drive the average stake length up largely, as long as COM gets the liquidity to offer these discounts. So this is where the power comes into play of how we create this automatic marketing system. Okay, because going back to the chart, we really get to call it an automatic marketing system once the value reaches over the 100% rate, because again, nobody's going to deny free money. And so because they won't deny the free money, they're definitely going to onboard into Hex by buying some Hex, staking it for 15 years so that they can then come back and get their money back that they just staked. And then what happens is maybe they got a couple extra dollars on top of that. So maybe instead of it just being a perfect 100% coupon rate, it was enough that it was $100 more than the 100% coupon rate. So they were able to stake, so they were able to put in $100, stake it for 15 years. But then on the other end, when they claim their COM, they actually get the $100 back plus another $100. So they got $100 for putting $100 out 15 years into the future on the Hex side. Now, in that event, when they are doing that at the 100% coupon rate, there's actually no value add to the Hex side because whatever value they just put in just got claimed and sold on the COM end. And if the liquidity to COM is tied to Hex, then chances are that value was claimed in the form of COM, but sold in the form of Hex to get back out into dollars. And so there would be no value add at the 100% coupon rate. However, there is the value add of that you have now just onboarded a new user automatically. And then you have to ask yourself what happens to that user in the future, because there is probably some statistic that can be figured over the course of time as to kind of what the conversion rate of this would be. But anybody who's coming and onboarding into Hex just to capture this free money, they are going to now have a Hex stake out there in the future for a 15-year stake, getting the maximum rewards from Hex. and they get to watch that value. They get to watch it accumulate more hex and more value over time. And as they're looking at that, they're going to ask themselves, maybe I should be actually adding more money into this. And so I'm thinking there's some conversion rate of people who would see the value that they got for free, but then later on they end up actually deciding that they want to actually now invest in hex because they're watching the value that they staked for 15 years. And what would actually happen is they end up putting more money into hex than what they originally claimed from COM. And so even though at the 100% coupon rate there's no value add to hex, you got the value add in the form of a new hex user. And then as the coupon rate goes down and finds kind of its consistent range, let's just, for easy math, say it's a 50% coupon rate, which would be here on the chart. If that were to happen, then anybody who is making a stake to try to get the 50% discount, well, the actual effect of what's happening there is that they have to put in twice as much value into hex as what they're taking out on the COM side. And so if we're at a 50% coupon rate, that actually ends up being double the amount of value in hex that's getting staked out 15 years. And so you could see how if this has liquidity over the course of time where it continues with people capturing this value as a consistent trend, then they're going to have to, the only way for them to capture that value is by staking hex for 15 years. And you should end up seeing a snowball effect of an increasing amount of 15-year stakes back to back to back to back to back to back. And we can also look at kind of what the current state of 15-year stakes is, which is pretty low number of opening 15-year stakes on a daily basis. I'm sure we would see that number rising substantially, and that's something fun that we'll be able to track as a community. So that is the key point. And so right now, where we are on this chart, where we're at the 5% coupon rate, well, in order for them to capture the 5% coupon rate, that means they have to put 20 times the amount of money into the hex side before they can capture that 5% coupon rate. And so this is where you start to see how this becomes a powerful tool for hex, because you get to offer a discount which is going to trigger people to make a quicker decision as to whether they would want to get hex. Because the state of things right now would be such that somebody on the outside who is thinking that maybe they want to get into hex, but maybe they want a lower price, well, they're sitting around waiting for the price to get lower, and it could end up being that they're just waiting around forever, and they're always too nervous to go ahead and pull the trigger because no price seems to satisfy them. But if we can raise the coupon rate in COM up to some satisfying level for them, it would entice them to finally go ahead and pull that trigger and buy into hex and then stake it for 15 years to capture that discount. Okay, so that's the power behind this thing. So it is a decentralized automatic marketing network in that fashion. I also like the acronym with that, Decentralized Automatic Marketing Network. The acronym for that is ADAM. So having a little fun with that acronym there, because that is a big power that the system has. And let's talk a little more about the other function of this system. So the other function of the system, I'm looking at two functions in this system. I already mentioned one of the functions, and that is to act as a automatic marketing network for hex, a decentralized automatic marketing network. That's one function. The second function is to act as a repo market. All right, so I just got done speaking on how, for example, if you're at the 50% coupon rate, that means that any user who wants to capture that value has to stake for 15 years and they have to stake double the amount of value in hex to capture that value. And so if you're a user who's going to provide liquidity on this, you have to ask yourself, well, it's nice that we can give discounts to onboard new users. But when you think about this in a decentralized way, you start thinking about tragedy of the commons, and you think, well, it would be nice if someone would give up that value to onboard the new user, but I don't want to personally give up that value to onboard the new user. But here's where it gets interesting. So if I said to you, okay, I want you to take $100 and I want you to go up to that stranger over there and say, hey, I'll give you this $100 if you onboard to Hex. So you're going to get the new user because the new user is they're going to want the $100. But that $100 came from you. But what if instead of you personally giving up $100 to onboard a new user, what if 100 Hex users give up $1 each from their own pocket? Now you have a situation where it only costed $1 from your own pocket for everyone to collectively come together and onboard a new user. And so then you start thinking of that value in another way. Instead of selfishly thinking, well, I don't want to give away value to onboard new users, you can think of it as collectively giving away value to onboard new users. And that $100 cost shoots down 99% down to a $1 cost for you personally. But then the other cool part about this is that cost only applies when you're at the 100% coupon rate. Okay? So it would only cost you the value necessarily if it's at the 100% coupon rate. But if you're anywhere lower than 100% coupon rate, then whatever is being claimed from COM had to be added in additional value to the Hex side. And so again, back for the easy math, at that 50% coupon rate, it ends up being double the value that they had to put into the Hex side to claim the COM value of the 50% discount. And so when a user is going to capture the value at a lower coupon rate than 100%, and you think about the people who are providing the liquidity for those users to capture the value there, well, when they're providing the liquidity, you have to think of this, that they are putting in more money on the Hex side than what they're taking away from the COM side. And that does something very interesting for the dynamic of the person who is providing liquidity to this system. And let's get into that right now. Okay, so I'm back on the spreadsheet here. Now, keep in mind, earlier in this video, I mentioned that the secret weapon that I've been teasing, the secret weapon is not the coin itself, okay? The secret weapon is the plan, okay? And COM is the coin that supports the plan. And so the plan itself is the secret weapon, and that secret weapon is encompassed within this table here, okay? This table here represents the ideal optimal allocation between Hex and COM as its liquidity, or at least as its allocation, okay? In order to have a perfect balance between the amount of value on the COM side versus the amount of value on the Hex side. All right, so it's going to be important to follow how this is working here. This will be the most important part of this whole thing. This is where we're going to find the functionality of the repo market. Okay, so the reason it would be a repo market is that the person who's providing liquidity to Hex and COM in the form of Hex and COM, that person expects a return in the form of fees for providing their liquidity. But if they are providing liquidity and it's getting taken as people claim their rewards in the form of COM, then they actually end up losing value, okay? However, the lower the coupon rate is, the less that risk is. Okay, and so just real quick, going back to the chart, you'll see that right now, and let me zoom in on the chart now. Okay, and you see the current level that we're at is a 5% coupon rate, but look at what happened here. It started out way below that, and it rose up there, what seems to be very easily reached this 5% coupon rate, and in fact, it actually shot all the way up to a 30% coupon rate, or just about 30%, very easily. And we're going to talk about how easy it is to shoot this coupon rate up after I'm done discussing this repo market. But we're at the 5% rate right now, and what that means is the lower the coupon rate is, the lower the risk is, because remember, the only people who can sell this chart down is people who are staking hex and then claiming COM for their hex stake. But remember also, the people who get the most COM are the people who stake the longest by disproportionate size, meaning the only people who are getting the most value are people who are staking very long, up to 15 years. And by the way, the difference between a 10-year and a 15-year is a very big difference itself. So it's really largely captured by the 15-year stakers. And so there comes a point in time where if there's enough liquidity here, then you get to develop a floor price, because the number of available COM to be claimed by stakers only has a certain amount that currently exists, and it can only affect the price to a certain degree based on the liquidity. And so that's where we're going to go back to this chart here, because this is the plan for the optimal allocation between hex and COM in the form of liquidity, where if the liquidity, okay, on COM at a 5% coupon rate, which is what we're at right now, okay, I have here, you see that the multiple of hex that has to be added, the multiple of value that has to be added on the hex side is a 20x when you're at a 5% coupon rate. So 20 times the amount of value that is being claimed from COM went into hex, and it staked for 15 years. And that was the only way they captured that value on the COM side. Okay? And so you can imagine, based on the current stakers, that there is a certain amount that they have available to claim. And if the liquidity size at the 5% coupon rate is right, then there's only a certain floor price that can reach before you're going to need new stakers to come along to send that price even lower than the current floor. And that current floor, if all the current stakes that can claim COM, if they all claim COM and then all of them dump, what's going to happen is you're going to have a situation where only new users at that point can affect the chart. But remember, the new user has to come around and they have to add 20 times as much value on the hex side. So that is the key, because now as the liquidity provider, you're thinking, okay, I've minimized my risk because I know the claimability, how much COM is out there to be claimed based on the currently existing hex stakes. And if they were to all dump, then we can measure out what the floor price would be based on the current liquidity. And so we'll get more into the liquidity very shortly here, but this section here is where I've come up with the optimal liquidity allocation based on the coupon rate, because this last column here that shows the value going into hex for the COM claimability, just to quickly explain what this is. So you have, let's think about this in terms of dollars. You have $95 backing the COM price, so $95 worth of hex backing COM, and then you have $5 that you take and you put that on the, you buy COM with that $5, okay? And then it ends up being for somebody to come around and claim the $5, remember they had to put 20 times as much value into hex. So by claiming the $5 that you gave them, they actually put $100 onto the hex side. But what happened there is that by you providing $95 worth of hex liquidity backing COM, I'm sorry, it ends up being $5. The $5 that you put in into COM that they claimed, they took the $5, but they put $100 into hex, and you still had $95 worth of hex. So when they come and they put the $100 into hex, what happened to the value of your $95 worth of hex? It ended up being a balanced equation where it was at equilibrium, where even though they took your $5, you actually ended up getting it back on the hex side because you weren't heavier allocated on the COM side, you were heavier allocated on the hex side. Okay, so that is where it's creating a repo market in the sense, or at least very similar to a repo market, because you provided liquidity on one side, but you ended up getting that liquidity, you ended up getting that value back instantly. Okay, so that is replicating what a repo market would look like in that sense. And then you see how the allocations change as you move up the scale of the coupon rates. And this is where it gets really interesting. But before I touch on that, actually, so you see, this last column here is actually representing the balanced equation. It's representing that no matter where we are on the coupon rate level with the allocations, the $100 is getting back to the hex side. That's what this column is representing. It's basically a validation column. It's validating that the equation is balanced on the two sides. Okay. Now, so that would be the reason the liquidity provider, and that's where this gets interesting, is that would be the reason the liquidity provider would actually want to provide the liquidity for the COM to be claimed, is because they're getting their value back while adding a new hex user. Okay? But where it gets even more interesting is as the coupon rate scales up, okay, and this is actually something that really surprised me, is because as the coupon rate goes up, I would think, okay, the coupon rate going up should mean that my risk is increasing if I'm buying into COM. However, it actually shows in the optimal allocation that the more the coupon rate goes up, the more COM you want to be buying. So remember, at the 5% coupon rate, we started out with only 5% COM as our allocation of hex and COM. And then as we go up to the 10%, it went up to 10% allocation, okay? And then as we get to 100% coupon rate, it actually says that you should be fully heavily weighted towards COM. Now, I do have to make a quick note here because this is important. This 100% coupon rate level, when you're looking at the allocations, you should not consider a 0% COM hex allocation with a 100% COM allocation, because that is more like on a chart, and this is kind of the math term that hopefully you can understand. If not, it's okay. But it forms an asymptote where it's approaching kind of an infinite value that can't be reached. And so it doesn't actually mean to go into a 0% hex allocation position. It would actually be some kind of infinitesimally low number where it would want like 0.001% allocated to hex. So just for simplicity's sake, we can ignore the 100% level just to make that a simpler concept to keep in mind. So I'm just going to hide that column. And instead, I'd rather you focus on the 99% coupon rate. Okay, so I'm just going to highlight that. And so at the 99% coupon rate, you'll see that the allocation looks more realistic. It wants you to be allocated with 99% COM and 1% hex. And that would mean that you have $99 into COM with only $1 into hex. But then when the user comes to claim the 99% of your COM, they actually gave you back that value on the hex side. Remember, you're getting $100 back on the hex side. That $100 now adds on top of your $1, which now canceled out your loss. And so that's where you get the power of this. Okay, but here's the key. This power only gets unlocked when the liquidity is the right size. Okay, so you remember I talked about that example where nobody would want to onboard a new user by giving away their own $100. But if they know that 100 people are going to collectively give $1 to onboard a new user, then it becomes a more interesting proposition, something that is more easy to agree to. So that would be the scenario that you get to reach if you are not the only one providing the backing, but you need a collective group of people backing it with you. That way, whatever value is being taken away on the comm side, well, that value hasn't been taken away from just one person. It's been value taken away from many people, spread across evenly, and it would equate to maybe 1% of your own personal loss instead of 99% of your personal loss, which is what it's saying here. Okay, so that's the key, is that it has to have the appropriate backing. So now let's get into how this has to be backed to unlock this power of the perfect allocation balance, to have a consistent onboarding experience with new users without taking away so much value from the current Hex users. So let's talk about that. Okay, so I had some hidden columns there, just to give you an introduction as to what it meant to have an optimal hex to comm allocation, and as to what it meant for this to function as a repo market. So I talked about the optimal hex allocations. That was in these two columns here that I have highlighted. Now, I have adjusted hex to comm allocations highlighted. And the reason for this is comm did not launch at the same time as hex. And because of that, you have a bunch of hex stakes that already exist. We would call them legacy stakers. And those users never got a chance to add a hex to comm allocation when hex first launched. So they didn't allocate their funds to comm and to hex. They only allocated funds to hex. And I'm thinking of this as a marketing budget. So imagine you want a marketing budget, but you only put value into the product itself, but you didn't put any value into the marketing side of your business. That's essentially what's going on here. So we have to use an adjusted allocation, because the adjusting has to adjust the risk for the users who never contributed to the marketing budget. So that's where I have the adjusted columns. I'm not going to get into the math of how I worked out the adjustment, but it is well, let's just take a look at an example. So for example, at the 20%, the optimal allocation was an 80-20, where you're 80% in hex and 20% in comm. The adjusted makes your risk less, because it wants you 95% hex and 5% comm. And with the adjusted allocation, if we go all the way to the 100%, instead of being almost 0%, remember that's almost 0%, not actually 0%. Instead of being almost 0% hex and 100% comm, with the adjustment, we're going to have an allocation of 74% hex and 26% comm. Okay? Now let's get into how much backing is required here. Okay? Now the amount of backing that's required is based on the current existing legacy stakers and how much they're able to claim and sell, basically. So the amount of backing that I have required here is basically based on the assumption that everybody who can claim comm will dump it. That's the assumption. So it's important to keep that in mind because these values represent maximum values. They do not represent required values. They just represent maximum values because these are the maximum values required in order to make sure that the risk is as low as the risk can possibly be. Okay, so basically we're using this as a way to minimize risk for the market. So this is actually a beautiful thing to me because we get to I don't know of any other cryptocurrency where you actually know the inherent value based on how much backing it has. It's all speculative in crypto, we know that, and we're all trying to find the value based on how much users are going to come in the future, and based on how much users are going to exit. But in this case, we can actually know the value of COM versus HEX based on how much backing it has because it creates a floor price with that backing. So that's a beautiful thing. And so these values at each coupon rate level are going to show you how much backing we need in order to have enough backing to minimize the risk of the current legacy stakers who can dump, okay, before moving on to the next level. And so if anyone listening to this is familiar with role-playing games, RPG video games, where you have experience points, I actually like looking at this as an analogy to that, where you have to get experience points to move up to the next level before you get to move up to the next level. And so since we're at the 5% coupon rate, we want to focus on filling up the 5% coupon rate with the right amount of backing before moving to the next level. Because if you don't, and I know this isn't going to work out perfectly because this is a market, free market, and some people are just going to shoot value out there. They're not going to be concerned with the risk. They just want to play the market. So it's not going to be a perfect thing. But if you see the coupon rate rise too high too fast without the required backing, then you're going to know that it's very likely we're in a bubble with the price. Because the legacy stakers who are able to claim and mint COM for free can easily shoot down the price anytime you pump it. So because of that, you do want to make sure that we have an adequate amount of backing first. However, you don't know what the perfect number is. You only know what the maximum number is. Because remember, these numbers are based on maximum amounts that can be dumped from legacy stakers that exist in the system. Okay? So it's basically assuming that everybody who can dump will dump, and we know that's not going to happen. So as you're looking at these values, I want you to look at these as maximums, and really the actual required backing is probably far less, probably to the degree of something 50% or even 70% less than these actual values here. And so with us at the coupon rate of 5% right now, it shows that we require a backing of $10 million worth of HEX, or just dollars itself, backing it before we would want to move on to the next level. Now again, you say to yourself, well, that seems like a high amount. But again, it's going to be a lot easier than what it looks like here because these are max values based on everybody dumping. But keep in mind, a lot of the users already dumped because this coin has been around since January, and a lot of people just claimed it, didn't think much of the value. They didn't really take the time to consider what kind of value that this coin could possibly have, and so they actually dumped it at a really low price. And there's diamond hands who could have scooped up that value, and so those diamond hands can reduce the cost that's required to back this, because if they're not going to dump, then that's that much more money that does not need to be backing this, since they're not going to dump anyway. So that would actually work out in the case of myself personally, where I was able to scoop up a lot of the supply, and I'm very disincentivized to dump because of the potential that I've seen in this. And I would like to see it get to the 100% coupon rate because I know that at that point we have an automatic marketing system. Okay? So again, we get to look at these values, and this is based on the current price of HEX. So based on the current price of HEX at about 1.4 cents, okay, it would require $10 million at the 5% coupon rate, And as you go all the way up to the 100% coupon rate, it's going to require $207 million worth of backing. But again, that is a maximum. Okay. Also, that 207 million is based on the adjusted allocation. So it would mean that we would want to see $207 million in total in this coin. But I'm going to move on to the next columns now, and you're going to see the amount of the allocation. So the way the allocation splits up. So let's focus on the 100% coupon rate. Okay. It wants 74% in hex, and it wants 26% in column. And so that equates to 153 million out of the 207 million on the hex side. And then on the com side, meaning that they just, instead of backing com, they just bought it. Then out of that $207 million, they take $54 million and they use it to buy com. Okay, so they buy $54 million worth, and then they take $153 million worth of hex and back it after buying it. Okay, and that creates the equilibrium that we want to see to have the automatic marketing and sustained automatic marketing. Okay. Not going to get too deep into these other values here, but basically we talked about the dollar values. It also breaks it down into the hex value and the com value. Now, this is actually a point, a major point that I want to make here. Okay, this is important. I want you to pay attention to this part. So you may look at this number, this $207 million required at the 100% coupon rate, so that we can have the automatic marketing. Okay. That number seems very high. $207 million, we're never going to get there. But here's the key. This does not have to be backed with dollars. It can be backed by hex. And so if you have hex sitting around liquid doing nothing, you can actually make that hex productive, and you can use it to back com. Okay? And the interesting part is, as the price of hex goes up, the dollar amount backing com goes up, meaning the required backing in dollars goes up, but the amount of backing required in the form of hex actually does not increase no matter what the price is. So I'm going to show you something really cool right now. I'm going to highlight this number here, and I'm going to even increase the size so you can focus on it. Okay. This is 14.3 billion hex. It's saying if we back com with 14.3 billion hex at the 100% coupon rate, then we can clear out all the existing legacy stakers, and we can make it so that we have an automatic marketing system at that rate. Okay, and that's based on the price at, okay, let's move to the price real quick, of hex at 1.4 cents. Okay, now remember, that number was 14.3 billion hex. You would expect that number to go up if the price of hex increases, but watch this. I'm going to turn the price of hex into $1. So now we're looking at a $1 hex, okay? And how much hex is required to back com at $1 to still continue the automatic marketing? Well, actually, look at that. It didn't really change. It still requires the same amount of hex backing it, just the 14.3 billion, no matter what the price is. And so that's where this gets really interesting to me, because if you look at the dollar value went from 200 million up to $14 billion to back com at the 100% coupon rate when the price of hex is $1. But it did not require any additional hex. So for any diamond hand hex holders out there who are holding hex liquid and they want to make it productive, well, you can use your hex and you can put it into the marketing budget by backing com. So that's the power that we have. We can use the hex to back this. Okay? Now, this actually opens up another important point. Okay? Now, dollar backing is always going to be superior to backing a coin with another coin. Because when you back one coin with another coin, the exit door is still the dollar. So what's going to happen is that the value is just going to jump from one coin to the next coin where it has the dollar backing, and then it's going to use that coin's dollar backing to exit. Okay? And what that would mean is that if you back the hex without backing it with enough dollars, then you can actually find a dark pattern in this system where it actually sends the hex price down. Okay, so you can imagine that if you take 14 billion hex right now and you back COM, that means that all the legacy stakers who exist in the system currently can all get out of their stake in the form of COM. They can capture that value of their principal in the form of COM. At least the 555 stakers can. The stakers under 555 durations cannot claim all the value. It's the 5555 stakers that we're looking at in this whole table, capturing this value. So that means that all the 555 stakers can dump and get all their principal back. But when they do that, if this is only backed by hex, then they're going to get hex, and then they're going to exit into dollars by dumping the hex price. Okay? So that would be a dark pattern in the system. It's very important to understand that that exists. Okay? However, if that event occurs, what you're gonna create is you're gonna create a spring on the price of hex, because the price of hex will shoot down very low, but you're gonna have a situation where, because that value shot down so low and you already got all of the legacy stakers to mint their COM and dump it, now it's easier to send the price of COM to the 100% coupon rate. It actually sends the cost of the 100% coupon rate down to 0, since the new holders holding it, they wouldn't want to dump it until it's at a greater price. So now you have a situation where everybody was able to get out. They did send the hex price lower, but now you can onboard new users by putting money into COM for them to claim it. And what happens there? As a result of that, you've created a spring on the hex price where all the new users have to put the value into the hex side to claim the COM side. And now you've created the spring on the price that is now moving back up. Okay? So just as easily as the hex price gets pushed down, it can also just get pushed right back up again. So even though there's a dark pattern in the system in that sense, where if it only is backed by hex without being backed by enough dollars, you can get actually downward pressure on the hex price as a result, you still just created a situation where it became easier to create an automatic marketing situation for hex. So it could actually turn out to be a good thing, because not only would that spring on the price be able to easily shoot the price back up, but those new users that are being onboarded are going to have a cool experience of watching that hex price go up very quickly as they're being onboarded. So even though it's a dark pattern, hard to really call it a dark pattern, because it creates a future scenario that ends up being blue skies in the form of newly onboarded users with an easily rising hex price at the same time. Okay, so there's just a few more points to touch on with this system. All right, I think it should be very exciting so far that we have a dual functionality system where it functions as a repo market and a decentralized automatic marketing network for Hex. Okay, based on the plan to use optimal allocations, okay, of Hex and COM to create a system that is promoting new users being onboarded into the system. Okay. So the other point to touch on here is this. Now, remember, we talked about the optimal allocations, where as the coupon rate rises and we approach the 100%, the amount of COM that it wants you allocating to balance the equation actually increases as the coupon rate increases, which is a bit counterintuitive, because, again, you would expect more risk in that scenario. Okay. However, because of the new users being onboarded and the amount of money that they have to claim, put into Hex for 15 years to claim the COM, it ends up being that they actually gave you that value back in the form of Hex. Okay. okay, as long as you're below the 100%, even if it's just by 1% below the 100% coupon rate, okay? So that scenario creates a scenario where you are putting an increasing amount of allocation into COM as we get there. But here's where it gets super interesting, and I want you to pay very close attention to this part, okay? We get to a 100% coupon rate, and then you're allocating very close to 100% of your allocation into COM, okay? But you start asking yourself, well, I want HEX so I can stake it, so if I'm putting it into COM, I'm not staking it. But guess what? The COM price versus HEX is influenced by the T-share rate versus HEX. And that influence is a one-to-one correlation. What that means is the COM price rises versus HEX, okay, at least theoretically, rises versus HEX at the same rate as the T-share rate rises versus HEX. Now that creates an interesting scenario because remember, we're allocating more and more and more, just an increasing amount of the allocation goes to COM. And when you get to 100%, you are allocating almost 100% to COM, okay? But since COM rises with the T-share rate, you actually have a scenario where you don't need to be staking HEX because the T-share rate rises at a faster rate than what a 1-year HEX stake can do for you. And in fact, it rises at a faster rate than what a several-year stake can do for you. Let's look into that right now because that's where this gets quite interesting. So over here, I have another spreadsheet with a table of values that represents the current years and the future years with the projected T-share rate. The projected T-share rate that I'm using here comes from apphex.win, where it has charts that show the projections shown here for the future of the T-share rate, okay? So I've laid out these values of the projected T-share rate on the chart, and then I have in column C here, and I'm just going to zoom in here so it's more easy to see, okay? That right now, when we get to the year 2024, this is at the beginning of 2024, it's showing that we're projecting a T-share rate of 34,606 HEX per T-share. Currently, we're around 30,135. That's a 15% increase. And then as you look at year 2025 versus 2024, 1 year later, it increases by 14% from that year to that year. And you'll see that as you go along, it's actually increasing, okay, at very high rates over time. It starts to diminish after we kind of get through that 10th year period, where a lot of stakes were out there on that 10-year mark. Okay, so that was the 2029 and 2030 year. After that, it starts to diminish down, okay? But what this means is we know that right now, as I highlight here, a 1-year HEX stake is paying you an APY of about 9.7%. Okay? Whereas a 10-year HEX stake currently is paying you about 24.3% APY. Okay? But as we look at this, okay, again, we're expecting in the next couple years 15% increases. That means that your 1-year HEX stake just became obsolete as long as this COM gets adopted by HEX users. Okay? So it means that the rising value of COM in the form of the correlation with the T-share rates rise versus HEX means that you can be holding COM and capture the value of COM's rise with the T-share rate instead of staking HEX. So this actually makes staking HEX for 1 year and perhaps even 2 to 3 years obsolete. And instead, if you're planning to make a 1 to 3 year HEX stake, it may be a better idea if you're seeing an increasing amount of liquidity coming into COM. It could very well be a better idea to actually just hold COM liquid instead of staking HEX for 1 to 2 to 3 years. So that is very interesting because it creates a scenario where it's actually promoting for Hex users to back this system, because by backing this system, they get the benefit of now being able to hold their value liquid while promoting a marketing budget for Hex, and they know they don't have to tie up their funds in a stake. Okay, they can promote the growth of the Hex system while holding their funds liquid, and also getting to benefit and get the benefits of the increased value that they may have gotten from staking instead. So that is another key point here, because it promotes, rather than just the knowledge that this system has the power to act as a repo market and act as an automatic marketing system, you also get the benefit of knowing that by promoting this system, you're actually growing your value at a faster rate than many sorts of Hex stakes themselves can do for you. So you get to promote the Hex system while getting to also capture value, while also getting to keep your funds liquid. Okay, very interesting point here. Just one of many fun, cool aspects of this system that make it so great in my eyes. So let's talk about just a couple more aspects of what makes this thing really cool. All right, so I'm back on my other page of the spreadsheet here. And the last point I want to touch on here is this little section here, okay? Now, we talked about the required backing that we would need in order to break through the coupon rate levels, okay? We talked about that already. However, it doesn't necessarily need to be the case that you get the backing first. It could be a scenario where if the collective global user base of Hex decides that we really like the idea of this automatic marketing system and we want to promote it and we want to protect the price at that 100% coupon rate, then you could have a scenario where everybody who's capable of minting COM with their legacy Hex stakes, you can have a scenario where none of them choose to dump. And by nobody selling, you can easily get to the 100% coupon rate. And right now, in this little section here that I've highlighted, I'm going to zoom in on it, okay? I've laid out the current liquidity situation with COM. Right now, the current liquidity situation, is that it has about $17,700 worth of liquidity, okay? Now, because of the way that the V2 Uniswap pools function, and because of that, the way that the Pulse X pools function as well, is that you have the uniform liquidity double-sided, and it makes it easy for us to equate how much money is required to move a price up, okay? Now, based on the fact that there's only $17,700 worth of liquidity currently in the system, and with that liquidity situation and the current price, we were at the 5% coupon rate. Remember the 5% we were at? Well, it takes right now $60,000 to get the price to a 100% coupon rate. That means any user or a couple of users can put $60,000 into COM as a market buy today, and it would send the price to a 100% coupon rate immediately. And then, as long as that coupon rate holds at the 100% level, then you have an automatic marketing system at that point where you can onboard new users by giving them the ability to claim free money. So that is a really cool aspect where, I'm going to go ahead and unhide these columns again. So it creates a cool aspect where even though it says that we should have $200 million backing this thing in order to sustain a 100% coupon rate, well, if you have a situation where the community decides nobody's going to dump, we want to see this thing thrive, we want the automatic marketing, we're not going to dump. Well, in that case, instead of $200 million, it's only $60,000 to get there, okay, based on the current liquidity situation. So that's it. That is the power that we have. It only takes $60,000 right now to transform Hex into a system that has automatic marketing behind it, okay? And then you just have to ask yourself, well, if we did use the $60,000 to market buy and pump it to 100% coupon rate, well, then you have to ask yourself, well, what percentage of this $200 million that would exist as claimable supply, what percentage of that is just going to dump immediately and send the price right back down to, say, 5% coupon level? So even though it's cool that we can, that it only takes $60,000 to get there, we do want to take kind of this experience level, experience points, role-playing game kind of approach where we're only going to think about filling up each level first before we think about moving on to the next level. Because if you're growing the backing, starting with the $10 million that's shown here, so you start with the $10 million, then you get to the next level at $20 million, the next level at $30 million. And if you slowly move up there, then you're going to have a sustained situation where if you do actually get the $200 million backing, then you're going to be able to actually sustain a 100% coupon rate. Okay. Now we have to, you know, put a little caveat in there to say that even though it would be sustainable, as the price of Hex rises, which you would expect if you're doing automatic marketing and you're capturing new users, the price of Hex will rise, and as the price of Hex rises, that actually drops the coupon rate because the ratio of Hex is actually rising versus COM. And so in that scenario, you're actually getting a dropping coupon rate, which actually makes it less marketable to whatever degree it goes to. So like if it goes down from 100% down to say 80%, well, you have to ask yourself at that point, you know, are we still marketable at an 80% coupon rate? And then you would need to start seeing more value coming into COM. And this is where I would hope that anyone who's doing the onboarding into COM educates the new user that, hey, COM is our marketing budget, and if you've grown to like Hex after seeing what it can do for you when you initially claimed all your COM, and now you're watching your 555 stake and seeing how much it's growing, and then you provided more value. Well, when you come to finally decide to invest more value into Hex, well, do it based on this allocation that we laid out here for you, because when you do that, you're promoting the system further. So that's how we would want to educate the new users. And then we'd have a sustained situation where whenever we get a reduction in the value from the 100% coupon rate, we can immediately increase that back, because remember, the allocation says that you actually want to allocate pretty heavily into COM when you're at the higher coupon rate levels. Because remember, this adjusted allocation section, that only applies because of the legacy stakers. But if we end up in the situation where we've already allowed the legacy stakers to exit, then you move from the adjusted allocation to the optimal allocation. And then it would actually be promoting that you want more and more and more COM weight in your allocation rather than Hex weight. Because the adjusted had it still heavily weighted towards Hex, whereas the optimal allocation had it mostly heavily weighted towards COM. Okay, so there's some key points for you of how this works. Okay, this is a very exciting system. Let's just touch on a couple of more anecdotal or kind of qualitative points before closing it out. This video has gone longer than I hoped, but you know, this is a huge package of value to disseminate, and so you know, doing my best to crunch it all in. I hope to do streams with folks, whoever would invite me on the streams, so that I can educate on this continually, because I think this is really important for Hex. I think this is the evolution of Hex. I think this is the one thing we needed, because we've always just been trying to figure out what's the best way to onboard new users. Well, what better way than to do it automatically just by putting your money up? Okay, so let's just touch on a few closing points, and then you'll have it. I would just love to continue further educating on this from here. Okay, so I've shown you some of the really cool things about this system, what makes it a secret weapon, because you have a dual functionality system where it functions as one, a repo market for Hex, where users who provide liquidity get to capture value while taking very low risk. And two, it functions as a automatic marketing system where once you reach a certain level with the coupon rate, if we're able to grow enough liquidity in the system, you can reach a sustained point of onboarding new users into Hex virtually automatically. It's like a snowball effect or like a perpetual motion machine where you just keep on piling more and more value on top of COM, and by piling more and more value on top of COM, you are bringing in new users, okay, consistently over and over and over again, okay? So you have this scenario of this kind of perfect storm of new users coming on board and growing the user base in the Hex while promoting a cool system. You also have the T-share rate that grows, which actually promotes more and more money going into COM and allocating heavily into COM, which then brings more money into Hex because they have to get the Hex to claim the COM. Okay, so we talked about all that. And just to touch on a few final points, something really cool that I think here is that when it comes to the OA, you have to remember, has more Hex than, well, it has about 90% of the liquid Hex. Okay, because of that, remember I talked about how it took 14.3 billion Hex to actually keep this system backed at a 100% coupon rate. Well, guess what? The OA can handle 14.3 billion Hex very easily. So if you recall that $200 million marketing budget that I showed earlier in this video, where currently at the price of Hex at 1.4 cents, it requires about $200 million worth of backing to have the 100% coupon rate, to have the automatic marketing system. Well, if the OA were to decide to back COM at, say, a 50% coupon rate, then he can cut that cost in half, just like that. Okay, so I think that's really cool, is that the OA has that power. We can also think about this from the aspect of the sacrifice funds, where, you know, if you'd want to speculate on that, the sacrifice funds actually have more than $200 million that it can immediately back at a 100% coupon rate. If you'd like to think of in terms of expectations, now we as Hexicans, we don't have those kind of expectations, but it is cool to think that this thing can be marketed automatically at the click of a button at any point in time, okay? And it can be sustained for a very long time as well. So that's another cool point. And then another cool point is that I think this is going to help to clear up the debate between E-Hex and P-Hex, because you have, right now, the market has to kind of give these qualitative reasonings behind why you'd prefer P-Hex over E-Hex, or why whales may prefer E-Hex over P-Hex. And this can clear out a lot of the debate, because it could be as simple as just saying, well, which Hex has the higher marketing budget? And, you know, in my opinion, it makes the most sense to concentrate the marketing budget into one pool, because it seems less efficient to split up the value into two different coins. And I don't mean that in the sense of splitting up the value into E-Hex versus P-Hex. I mean actually E-Com versus P-Com, where if you're thinking of COM as a marketing budget, well, why would you want to split up the marketing budget instead of concentrating the marketing budget? Okay, so I think it'll help clear that debate up. And so that to me is actually some of the cool, really cool aspects behind this. So I'm really hoping that this gets the support from the community. I'm really hoping that everybody was able to understand the information that I laid out in front of you today. And I also really hope that I can continue to educate the community on this, because I think this is as good as it gets for Hex. I think this is the evolution of Hex. And I now think that Hex and COM is a fusion together, where instead of thinking of Hex and COM separately, I would think of them as a fusion, just one coin, because your allocation is the fusion, how you're allocating your money between Hex and COM. So there you have it. I would love to continue the discussion and continue educating on this. You can go to the Communis webpage. Remember, I am not the founder of Communis. So it has a web page, it has the Telegram where you can go to ask questions. Um, and I would love to continue doing streams with people. Also, I do want to mention that I have collected a large amount of the supply because a lot of people have dumped it for nothing, really. They gave it away too cheap. And so I've collected a large supply, and I plan to take my supply and lock it into Time Pays Me, which is Matty Allen's tool that he created. I'll be working with that to lock up the funds. That way, it shows that I really do have not only faith in this system, but I want to see it. I want to see it work, because if we do get to that automatic marketing phase where we're at the 100% coupon rate, it's going to be really cool to see what this does, because guess what? This is the secret weapon for Hex. And so with that, I'm going to let you all go and study this more. I'll be getting the spreadsheet out. Come into the Communist Telegram room. You'll be able to find the spreadsheet there. It's not there yet. I'll put that in. And you'll be able to play with the numbers yourself, and we'll be able to discuss the numbers as well. So with that, thanks you all for listening, and I'm sorry about the length of the video. It was very difficult for me to figure out how to pack all this information into 15 minutes or so. So I apologize, but hey, you know, if something's good enough, it's worth the time, right? So with that, thanks a lot, and see you around.